Hi, it's Darren Mitchell from Control and Compound. We have exciting news. October 29th in Vaughan, I want to participate in the Everyday Investor Summit. We're going to teach you 7 proven strategies with 7 different speakers, experts in the real estate world, on how to grow that passive income. Your money's working for you while you're not working. Check out the event, check out the speakers. In-person event in Vaughan, October 29th. You don't want to miss it. Hi, welcome to the October update. What's going on with real estate, Bitcoin, stock market? What's going on in our industry? Hi, everyone. Welcome to Control and Compound with Darren Mitchell. I'm your host, and joining me as always, Christina White. Christina, how you doing today?
Hey, Darren, I'm doing great. It's, we're into our October update. We're in my favorite season of the year, fall. So I'm doing awesome. I love this time of year.
I know we're having better weather now than we had in August. The days are beautiful, hot and sunny here, so it's great so far. I like fall. Okay, Christina, let's get into the updates. One of the most followed things going on in the news is Bank of Canada interest rates. What's going on with the Bank of Canada interest rates this month?
Yeah, so they had their announcement back on September 6th that they were not going to be moving rates. So they did stay at that 5%, prime being at 7.2%. Now we do have an announcement coming up on October 25th. They're going to make another announcement. I don't think from the sounds of things, I personally don't think from the sounds of things that we're going to be staying and holding again. And there's a lot, I know the economists out there, I think there's 42% thinking that there's going to be a increase as well. And that's due to that inflation word, right? So it's always kind of tying back. And I know we talked about, we were like, yeah, down in June. We were down in June to 2.8, almost at that 2% they were looking for. But then in July, we went up to 3.3. And then, August, we're back at that 4% where we're not supposed to be. Bank of Canada seems surprised. I'm not so much surprised with the carbon tax rates and, those increases to mortgage rates. They've definitely put an impact on families and the way inflation's looking. So we've got another one coming up October 25th. All we can do is wait, but we'll see what happens.
Yeah, I mean, I was looking at gas prices the other day, and I looked in Toronto. Gas prices now $1.60, $1.70, depending upon when you're listening to this. 3 years ago, the gas price was 97 cents. So that's about a 75% increase in the last 3 years. So energy or gas up 75%, and then the question is, well, what does that affect? Well, how many things in your grocery store get delivered by a gas-powered truck or diesel truck? Everything. How about your building supplies? How about all the goods? How about all your Amazon deliveries? Everything is dependent upon fuel. So when we see fuel prices go up, we see a carbon tax added. It just, you can't go up 75% in gas and not expect to see inflation, because energy is such a major component of everything we do. Without low-cost energy, it's going to be hard to battle that inflation.
Yeah, absolutely. I don't think their fix is the fix. I don't think their fix is the fix. But all right, we'll see.
And then mortgage rates. So the 5-year mortgage rates moving around closer to 6%. But we thought this was interesting. In 1980, the mortgage rates were 16%. 1990, they were 12. 2000, they were 8.25. 2010, they were 5.1, and 2020, they were 2.65, or as we refer to that, the good old days. So when we look at the historic interest rates, it's, we're not really in a high environment right now, even though it feels like it.
Yeah, it's kind of normal, that 5% when we look back historically. But one thing that we have to keep in mind, and that people keep pointing out, which is very true, is the housing prices, right? So if we look back in the 1980s, the cost of the same house that it is now in 2023, if we run the math on it, even though that interest rate 16%, typically the mortgage payment is going to be less than what we're paying right now. And that's just because the price of it. That's like the same home with no renovations, I would say. Right now it's the same, just add that price. So it's hard like with the looking at it, like historically, are we going to see it go up or is it going to stay around the same? I'm not sure, but it's having just as big of an impact on people due to home prices than it was in the 80s when we were at a 16% interest rate. Like they're feeling the exact same squeeze because of the home prices.
Yeah, I mean, back in the 80s, you could buy a house, I think, 2 or 3 times the average family household income was the price of a house. And now in Ontario, it's probably closer to 8 or 10 times. So, yeah, I mean, even if the interest rates come down, because we've had such a massive increase in the price of real estate, payments can come down if interest rates come down. But, relatively speaking, it's still such a large portion of people's income going towards housing now, larger than ever. Combination of interest rates and those increases in price. So, you know, I don't know if prices will come down when interest rates come down, or the opposite will happen. We see interest rates come down and people get all excited. The interest rates are back down, and we see a massive uptick in prices because people all want to buy at lower interest rates. It's going to be an interesting year or two to watch, anyway.
Yeah, for sure. Now, on that interest rate side of things, we also have the guaranteed interest rate product. So this is something to definitely keep in mind. These days, high interest savings accounts and, high interest savings funds are offering around a 5.3, I think 5.35% and anywhere upwards of 4% or so with most companies. So if your money's sitting in cash, it really shouldn't be at this point in time. We can't keep up with inflation sitting in cash. So I definitely, take advantage of those different high interest accounts. The longer term, like even the 5-year GICs and stuff right now are up in that 5% zone. And usually when we see that, it means that things aren't changing on the horizon very quickly is what I take when I look at that. So, just some insight from what they're seeing, what they're thinking they're going to continue to be. If they're thinking they can offer 5% for the next 5 years, there's a very good chance that interest rates are going to stay around this point because they're a pretty good predictor. That's what that's what they do for a living. So
yeah. Historically, if you lock your money up for a longer period of time, you get a higher interest rate. But for the last year, we've been the opposite. The longer 5-year GICs were paying less than some of the shorter ones because the expectation was rates are going to go down. And now we're back to the longer term GICs are paying more than the shorter term.
But not by much, eh? Like I
Not by
looked at
much.
them and the 1 year versus the 5 year, we're not that much in the difference. Like it's pretty standard across. And that's why a lot of people are just like, well, I'll take the daily at 5.35 because I don't have to lock in and I'm still getting that, 5% daily rate of return. Now you don't know if you're going to keep it for 5 years, but they're kind of predicting it's going to be around that rate for 5 years based on their rates too.
Yeah. And then Bitcoin. So Bitcoin news, a couple exciting things going on in Bitcoin. So Bitcoin's around 27,000 time of recording. That's up 68% year to date, but actually down 2.5% for the month. But a couple cool things in the Bitcoin. We're now down to like 200 days or less, depending when you're listening to this, before the next halving. That'll be April 2024. And for those of you who don't know, basically when you mine this Bitcoin, you get paid in Bitcoin. The amount you get paid will be cut in half. So it's basically going to be harder and harder to earn Bitcoin through mining. So historically, when that happens, price goes up. Will it happen this time? Who knows? There's a lot of other variables going on. And then the other cool thing, so the big news we've been following in the States is the States does not have a Bitcoin ETF. So in Canada we do, in the States they don't. And the expectation is when Bitcoin ETFs come out, that'll make it a lot easier for people to get into the Bitcoin world without actually holding their Bitcoin in cold storage and all that stuff that scares some people. So the SEC, the Security Exchange Commission, rejected the last couple Bitcoin ETFs, but a court ruled that the ETFs they were proposing were similar to other ETFs already being proposed. So now the SEC is deferred an answer until January. So in January, they're going to look at a couple different ETFs that were approved, and the expectation is BlackRock and a couple of the others will resubmit under some new, slightly different terms. So if that happens in January, where the SEC approves an ETF Bitcoin, again, could really drive demand because it makes it easier for people to get in the Bitcoin market. Don't know if that's going to happen, but it seems like it's moving closer and closer because we had the This is weird in the States. The Republicans and the Democrats got together, and they both and on a bipartisan way, and they wrote letters to the SEC saying this is why we think ETFs for Bitcoin should be approved. So we've got the politicians in the States clamoring for it. We get the courts clamoring to it. We get the SEC kind of maybe warming up to it anyway. So it'll be interesting to see early next year if Bitcoin ETFs happen in the States. And I think if it happens, we're going to see an uptick in Bitcoin prices.
So between that and the halving, definitely going to see an increase.
Hope so.
Yeah. Depending on when you're listening to this, I'm just going to give a little stock market update because it is changing quite rapidly by the day when you follow those headlines. I'm like, I'll grab it for the day. I can't guarantee you when you're hearing this, and we record these pretty close too. It's going to be the exact same. But in the stock market, the S&P 500 year to date is up around 12%. So we are up from that negative 18 last year that we saw. We're up about 12% year to date. Bad September, though. There was a drop of about 4.5% in the S&P 500, so it's been a bit rocky. Again, uncertainty. The markets do not like uncertainty, and us not knowing what the interest rates are going to be next month definitely takes a toll on that as well. The TSX, it's year to date up around 1%. In the last month, down around 3.5%. So it moved up, moved back, moved up, moved back. That volatility we talk about, right? Those ups and downs are happening.
And meanwhile, cash value just keeps going up every single day. Boring but effective. Boring but effective. And then real estate, you're really mixed bag. Depends where you live and really what community you live in the country. But national home sales declined 4.1% in August. And the actual activity was up slightly at 5.3%. The number of newly listed properties was pretty much flat, 0.8%. But overall, the actual average price increase was 2.1% for the year. And then we've got some numbers for each province. If you're curious, I'll hit a couple. So the average home price in BC now is almost $960,000. They're the winners, followed by Ontario at $832,000. But if you're looking to move to New Brunswick, Saskatchewan, Newfoundland, Manitoba, Prince Edward Island, their average home price all in the 300s. Nova Scotia up to 418, Alberta at 445. So we got BC and Ontario still at those massive levels compared to everyone else. But as real estate investors, you can buy anywhere. So maybe if you live in a province where the cash flow doesn't make sense, you might want to look somewhere else. But anyway, pretty flat. Everyone's kind of waiting to see in the housing market. What's going to happen to interest rates? What's going to happen to inventory? When interest rates drop, are prices going to go up? So I think we talk to real estate investors every single day, and there's a lot of people sitting on cash, a lot of people sitting on the sidelines. So it's going to be an interesting next couple of years, I think. I think there's going to be huge opportunities, but really just another month of a mixed bag in the real estate.
Yep. And then in industry news, I know, Darren, you actually sat down with one of our underwriting experts and had a conversation about some neat updates that are coming our way on that side of things, which I thought were really interesting to hear about.
Yeah, I was able to meet with the vice president, person in charge of underwriting for one of the major insurance companies we deal with. And real interesting, the new stuff kind of coming out on underwriting in the next couple months. AI is becoming a bigger part of underwriting where insurance companies are trying to get the cases approved. But one of the things they've done, this insurance company, they haven't announced it yet, but they're going to come out with their, when the nurse calls and asks you questions on your medical, it used to be 28 or 29 questions, they're chopping that down to 13. And they're really starting with, are you on any meds? Kind of like your doctor would ask you, are you on any meds? Well, yeah, I'm on this med. And then the questions go from there. So the goal is to be a lot shorter and not ask as many questions that they think are really just irrelevant. A lot of these questions, well, we've always asked that. Well, why do you ask it now? They also talked a lot about blood, how blood is not as important as it used to be. We typically don't see blood tests on our policies now, just because blood can be so different. It can be, you take it this morning and then you take it next Thursday in the evening. It could be completely different results, or at least not completely, but a big range on that. But AI underwriting's coming or increasing, and then we're going to make it easier to get underwritten. And I think all the companies are kind of following suit, saying, how do we make it as easy as possible to get underwritten, and how do we be smarter about it? Where we start, what meds are you on? And then the couple interesting stats I heard. I asked about, well, all these conditions, how big a deal is it? And I asked about blood pressure. And I said, what if you're on a blood pressure pill? Because we get a lot of clients that are on blood pressure pills. And the underwriter was like, no big deal. Like 50% of people over 50 have hypertension. 50% of people over 50 have hypertension. So again, we're not looking for you to be a world-class triathlete to be insured. We're looking you to be average, right? Average or better health. So 50% of people on hypertension meds, no big deal as far as underwriting's concerned if it's controlled with the medication. I think that was it on underwriting. Anything else there I missed, Christina?
You mentioned about the like treadmill tests and stuff as well, that they're starting to look, which I love, because some of the old standard ways of looking at things, they're just not the same. Like one of them is like BMI. Like they use that BMI chart sometimes, and it's like if your muscle weighs more than weight, so if you're out of your BMI because of muscle, you could be an athlete, like you could be an extreme athlete and your BMI is still off because of that muscle side of things. So you had mentioned that they're now starting to look at different things like treadmill tests and what was it, the VO2 max treadmill for runners and stuff. They'll actually take a look at some of those tests that they might not have previously and add them into the mix.
Yeah, and she actually referenced the book Outlive. Dr. Peter Attica wrote a beautiful book on Outlive, on how to live to be 100 and healthy and all this stuff. And they talked in the book about VO2 max and treadmill test. We get the thing on. Now, we're not asking anyone to go do a treadmill test to get insured, but it's if you had done that in the past and it's good results, share it with us, because the underwriters will look at that and say, oh, well, if your VO2 max or your treadmill test, you've done that, for whatever reason in your personal life, and you get those good results, then yeah, they'll consider that. Interesting. I'm going to a conference in Denver this month, and they have someone speaking on VO2 max, and they actually have a thing set up that they can test your VO2 max while you're at the conference. So it's becoming, and again, no one's going to have to do this. I'm just saying it's some of the things they're looking at from differently for underwriting now to make it easier to get people qualified, because some of the reasons we rejected people for in the past, we're not rejecting them for today. So a lot of people think they're uninsurable when in fact they are totally insurable. It's just, oh, well, I've got this and this. And it's like, well, yeah, but it's probably not going to kill you in the next 20 or 30 years. So we can get you insured. So a lot more liberal underwriting coming, and like logical underwriting, as opposed to some of the, well, we've always asked this question, we've always done it this way. So I was real encouraged by some of the changes. And then the other interesting stat, I always ask this one anytime I get to an underwriter, how many claims did you pay last year? And they said, well, we paid every single claim that was legitimate for a life insurance claim. And I'm like, all right, but how many didn't you pay? And this major insurance company paid 99.8% of claims submitted last year. And the literally handful, like on one hand, the claims that weren't paid, a couple suicides in the first 2 years, which they don't pay. And a couple people, stage 4 cancer, and they forgot to mention that when they filled out the application. So if you lie in the application and don't mention you have cancer and you die 6 months later, they're going to investigate the claim. So really, I've never seen a claim not get paid in my years. 99.8% of claims, if you have a legitimate life insurance policy with a legitimate insurance company, legitimate advisor, the likelihood of that not getting paid is 1 in a zillion. I don't know, is a zillion a big number? So anyway, just, life insurance at the end of the day pays.
No, that's great stats. I love hearing that. They're in the business to pay claims, right? That's what they're there for. News for us. So that was industry news. How about news for Control and Compound? So if you haven't seen it yet, you probably have. We've been sending out emails and putting out notices and links and everything for the Everyday Investor Summit that's happening on October 29th. There's going to be a great lineup of speakers. Rav Tor is going to be, heading that up with his guests and sponsors. Darren, you're going to be speaking at the event, along with some really great experts in their fields as well. So if you haven't seen that yet, definitely check it out. That's coming out at the end of this. That's coming up at the end of this month, October 29th. There's also live stream tickets. So if you're not in that area, you can jump on and purchase a live stream. And I think they just started a deal, buy one ticket, bring a friend as well. So you buy one ticket and you can bring a friend with you, which is great. So check that out. The other new kind of relationship that we're building, and kind of just started this month is with Savvy Investor and Michael Ponte. So we were just on his YouTube channel last week, chatting with some of the individuals that follow him, and it was awesome. He's a great guy. We're super excited to be teaming up with Savvy Investor, and providing information, talking to those guys over there, and just working together, building that relationship.
And then podcast-wise, we had some great podcasts last month. If you missed it, we just did one, What We Learned at the Real Estate Investor Summit. Again, we believe in investing in ourselves, so we went to the Real Estate Investor Summit that I spoke at in Toronto in September. So we get a podcast on that. We get a lot of good feedback on the one TFSAs versus whole life and comparing those two. We put another one in for our Nelson Nash series, reviewing the Becoming Your Own Banker book. And we had Mitt Perrin on discussing REITs, which was pretty cool. Real estate investment trusts and how they're taxed and how you should buy them, what you should look for. So if you're interested in some passive income on a REIT, check that podcast out. And next month, Christina, we got some cool stuff coming again.
Yeah, we've got some exciting podcasts this month coming out. One of our first ones you'll see later on this week is we have a guest, Mark Yatako. He does the podcast Taco About Investing. Super, super cool guy. But what I love about it is that he's talking about something different. So renovations for real estate investors. So, we've talked about that lift and those renos and how important they are in real estate investing. Well, this is the guy to talk to that specializes in that. So we recorded a podcast with him, so you're going to want to check that out. We're going to continue our series on Bitcoin and Nelson Nash, Becoming Your Own Banker. And then as well, another one that I thought was pretty cool is we did a podcast on Vitality. So Manulife offers a product called Vitality. Just recently, we were able to start adding that to our high cash value life insurance policies, which is a game changer for individuals that want to get rewarded for being healthy, because that's literally what this does. So have a podcast on that and all of the rewards and whatnot that comes with it. And then as well, we're going to be coming out with a podcast on group insurance for business owners. So a lot of business owners, have lots of questions around group insurance, getting that for employees, and lots of questions around it. So we figured, why not have a talk about it and get that out there as well.
Love it. Great. All right, that's the October update. Thanks for watching. Thanks for listening. Have an awesome day. Thanks for listening to this podcast. If you're listening on YouTube, please like, subscribe, and hit that bell button. If you're listening on your favorite podcast platform, please leave us a 5-star review and subscribe. And if you want more information, check out our website, controllandcompound.com, and you can sign up for an education session with one of our wealth coaches.